Looking at the list of stocks you provided: Hcwb Biologics, Hcwb, Icct, Icct, Lobo F Technologies, Lobo, Licn International, Licn, Mogo Inc., Mogo, and Lsea Homes Corp., Lsea. I'll walk you through an analysis of each, focusing on their fundamentals, recent performance, and whether they might be worth a buy right now. Starting with Hcwb Biologics, the numbers don't inspire much confidence. The company is generating only modest revenue, around $0.57 million, but it's burning through cash at a much higher rate, posting a net loss of about $30 million. The EPS is negative, and there's no analyst coverage to provide any bullish outlook or consensus. Based ratings put this stock at a 3 out of 10, suggesting a sell, and the probability of it outperforming the market in the near term is considered below average. Based on these factors, Hcwb doesn't look like a buy. Its fundamentals are weak, and there's little in the way of positive momentum or coverage to suggest a turnaround is imminent. Next, Icct, ticker Icct, shows a similar pattern. While the company's revenue is growing, hitting about $11 million over the trailing 12 months, it's also posting a net loss of $30.79 million. The EPS is negative. There's no price-to-earnings ratio because of the losses, and again, no analyst coverage. The high losses and lack of profitability are big red flags, unless there's a dramatic change in the business model or a sudden surge in demand for their products. Icct doesn't seem like a stock to buy at this time. Lobo F Technologies, ticker Lobo, is a bit of a wild card. The stock has surged over 130% recently, driven by investor excitement about their battery technology innovations and some strategic partnerships. Their latest quarterly revenue was strong, coming in at $21.1 million. However, the technicals show that the stock is trading below forecast. Sentiment is neutral, and volatility is high. There's a short-term price target that suggests some potential upside, but this is a speculative play. Momentum and innovation are positives here, but if you're not comfortable with high risk and volatility, it's probably not a good fit. For traders who like to chase momentum or are looking for a high-risk, high-reward play, Lobo could be interesting, but it's not a safe bet for long-term investors. Licn International, or Licn, presents another cautionary tale. The company did manage to grow revenue by about 4.3% year-over-year, but it swung from profitability to a net loss of $6.14 million in 2024. The EPS is negative, and free cash flow is declining. Even though revenue is up, the recent financial deterioration outweighs that positive. This kind of reversal is often a warning sign, and without a clear path back to profitability, Licn doesn't look attractive as a buy. As for Mogo Inc. and Lsea Homes Corp., there's not enough recent financial information or news available in the search results to make a solid assessment. Subscribe.